Hello and welcome back to Money Talks with me, George Pitcher, and a great warm welcome to Edmund Shing, now of BNP Paribas.
Thank you, George.
Edmund, part of the summer transfer window, along with other Premiership players, now at BNP Paribas. Congratulations and welcome back, Edmund.
Thank you, George.
Good to have you back on Money Talks. Now, you've written an article for us this week addressing the recent stock market collapse that we've witnessed. Now, with stocks and shares down by up to 15% in the Footsie index, this isn't a great time for investors to be in the market, is it?
Well, you know, George, that's where I would completely disagree, because you're right.
I thought you might.
Your reaction is the classic reaction of an investor who has been invested. Of course, when you see something go down, an investment of yours go down 15%, it hurts. So you're hardly likely to make a further investment. But that's precisely when you should be investing. Think about it.
Are you saying it's hit the bottom then, Ed?
You never can say that with 100% certainty, George. But what I would say is when prices are down 15%, you are buying something 15% cheaper. In the real world, we love buying things 15% cheaper. Why not in the investment world as well?
I see. So are they buying with a view to those prices improving and making a killing in the market? Or is it a time to be looking at what you might be earning off your shares?
Well, I think there's an element of both, George. I do think that the long-term prospects for the UK stock market at the moment are pretty decent. Again, the domestic economic backdrop is still strong. And I think what we are not going to see is a global recession. That would be the sort of nightmare scenario where stock prices could go much further lower. I don't see that on the cards. So from that point, I do think income is an attractive strategy because it's a more defensive way to get into investment, but at the same time, making sure you have a nice regular income.
Some economists have spoken about a sort of three-phase recession over time. You know, we had the 2008 sort of Western economies. Now we're having the Far Eastern and Chinese economies taking everything down. Is that a sort of view that you subscribe to, that we're steadily on a downward slope?
Well, I wouldn't be that pessimistic, but it's quite clear that Chinese growth has slowed down. What I would also say, however, is that Chinese growth has not collapsed and that the Chinese government still has a number of measures that they can put in place to stimulate the economy. So we should never forget that. Okay.
Name some names, Ed. What are the stocks we should be looking at for dividend growth, I suppose?
Exactly. So if you want income and you want something that's going to give you a much better income than money in the bank or even government bonds, names like Legal & General stand out. A FTSE 100 insurer, again, very solid profitability base. Profits are growing steadily. Dividends are also growing steadily. And today you have a dividend yield equivalent to your income of 5.7%.
What about funds that I can invest in to take advantage of dividend potential rather than necessarily capital growth?
Well, absolutely, George. There are plenty of choices available. What I would suggest would be an exchange-traded fund, which is you can be bought or sold like a share, but it's actually a fund, an ETF. The iShares UK Dividend ETF is basically a fund that holds 50 high-yielding stocks like Legal & General, but 50. So you spread your risk across 50 different companies, all of which have good yields. And that, again, is about £9.18 to buy at the moment, to buy one share. And effectively, you're buying something with a yield of 5.4%. So again, still a very high dividend yield, a nice income well in excess of what you can get in the bank or elsewhere.
Thank you very much, Ed. So as the weather turns rather duller after a glorious summer, there isn't all to despair in the stock markets. Look for dividend growth, follow Edmund Shing's NAP, Legal & General, and let's see where we go. Thank you for watching Money Talks.